Good afternoon, traders. Today is Saturday, November the 20th. In this video, I'm going to be going over some of the events that took place over this last week and what we could look forward to next week, being that it's a little shortened because of Thanksgiving and typically there is lighter volume. Now, last year, remember, we had the debacle with Dubai, which actually raised the volume in the markets. Now we have Ireland and we're having problems with them. Personally, I don't think that there's going to be very large swings in the market. I think that next week people are just going to be leveling out and tightening their positions up for a strong December finish. Right now we're looking at the E-minis chart, and that high we put in back in, what was it, late April, was 1208 on the ES. And right now, after that sell-off that we've had over the last few days, we finished up strong today. Actually, over the last 2 days with a close at 1198.25. Now this uptrend is broken that we've had right here, and we're still below the 1208. Now next week what we're going to look for is probably to trade in this range between 1164, which is the post flash crash high, and 1208. If we trade in that range and then we break out maybe on the 1st of December, if we break over the 1208, we're going to see what could happen around this 1220 level, because this is where the buyers got trapped, the inexperienced buyers, which thought that the market was just going to keep going and they thought it was going to hold this 1208. Well, they held their position, and what you can see is then they came down here, of course, to the 1195 level, and they started saying, okay, well, I think it's going to go back up here. I'm going to buy a little more down here. That only got them caught further. Now you see this huge down move, and what happened here, remember, we had that 22-point down move just, 3 days ago. And then that's when all the inexperienced people that were buying up here were probably getting out of their positions, and then that's when the smart money came in and bought this thing up. And maybe some people did hold on, and the people that were long up here that did hold on are trying to get it back here so they could say, okay, now I got this burden off my back, we're back to break even, I'm going to get rid of my position. And I'm sure everyone's gone through this. I know I have personally. Any trader, you just have to learn from your mistakes and know when the proper risk reward is on the table. I am not sure what's going to happen with this Ireland mess. I don't think anybody is right now. All we know is that the elections are out of the way, and this QE2, which only means that they're going to print more money, which will also devalue the dollar. That's what's really in play in the markets right now, and that's even priced in. Going into this next month, you have to know that these big fund managers and mutual fund managers are going to have to put some of their money into play, maybe more than they like. Some of them are underperforming the S&P, and if that's happening, their clients are going to be asking them at the end of the year when they fill their last quarter statements, why are you underperforming the S&P, which is up about 9%? So then they'll have to go and start purchasing assets to try to even out their balance sheets. Now we're looking at gold, and gold did hold the 50-day moving average, and right now we're flirting with the 20-day. We got to close at 1352, but it looks like we tried to run up and test that 20 at 1363, but we pulled back a little bit. Now we have an ascending 5-day, so it's going to be interesting to see. I think that if we could get over the 20-day moving average in gold, there's a good chance we will head back to the 1390 level. But if we break down, this move could be pretty violent. If we break the 50 at 1336, 1275 could be a very realistic number, which is right around the 100-day moving average. Now, crude oil has been weighed upon as a very negative trade over the last week. But let's take some things into consideration here. We are holding the 50-day moving average on crude, which is at 81.24. This is this red line right here. The 5-day moving average is starting to turn around, not quite yet. If we have an update tomorrow, this moving average will turn around and the white color will show that it starts ascending. We have to get above 82.97 and hold before I can become bullish at all on crude. Right now, as a trader, I wouldn't be trading this tight range. We want to see whether it breaks out of the 50 and then heads towards the 200-day moving average, or it breaks above the 82.97, which is the August high, and we get above that and then try to test this 84.13, which is the 20-day moving average. And eventually, this is a little longer term speaking, if we hold above 82.97, get above the 20, we're going to look for a move back to 90, maybe by year's end. It depends what events take place in the market. We're looking at the US dollar right here, and I have to point out on the dollar that this little formation we put in, this little island top it's called, is bearish. We ran up, and right as soon as we got to this downtrend, we sold off. And now we got to close on the dollar at 78.50. Now the 50-day moving average is at this 78.51, so pretty much right where we closed. That's where the 50 is. We're looking at the on-balance volume, and it's decreasing, and we're also looking at the regular volume, which has decreasing volume over the last few days. We're going to see if we hold this 50 or at least hold this 20-day moving average. If we come down here, we sell, and then we bounce off the 20 and maybe break out of the downtrend, I think there will be some more buying that comes in the dollar. And the target will be the 100-day moving average, which is at 80.60. If we break below this 20-day moving average, we're going to look to retest lows. Now we're looking at the SOX index, which, if you don't know, is a semiconductors. And this one's pretty interesting right here, because if you look at this chart, it's definitely bullish. We're above the 20-day moving average with volume. We have an ascending 5-day moving average. We're above July high at 371.04. So the only thing we could think is that we're going to take out this previous high and then head up to 400, or 404 to be exact, which is the high that we put in April. The thing that I'm a little pessimistic about on the SOX index is the reason we were being led down in this August rally was because of the SOX index. It was very fearful for investors. They were saying a lot of the semi stocks were slowing in growth, and that was causing the market to initially slow down and bring the NASDAQ down with it. So when we've had huge buying coming here, a lot of it was probably, I'd say, about from right here to right here was all short covering. And then after we break out of here, this move was actual buying, and then we pulled back. So like I said, if the stocks go head up, we're going to look for these two levels to be taken out. And this is the ending of the video. I only have like 2 minutes left, so I'm just going to point out some individual stocks that I think you should be looking at. I know I am. NOV, this stock is so strong compared to the other stocks in its group. Now, it had a lot of option call buying 3 days ago, and I'm sure it continued yesterday too. So the chart's totally bullish. Everything about this here. On balance volumes making new highs. We're above the average volume. We have a buy on the PPS. We have an ascending 5-day moving average, and of course all of our other moving averages are up. And then what really makes this chart stand out is they wouldn't even give people a chance to buy it at the 20-day moving average, because a lot of people put their buy orders in during these moving averages. I've been emphasizing that through my videos lately, but they just ran this thing up. So if we could take out, I wouldn't say it's a particular investment, but for short-term trading, day trading, we should set our alert each day at the previous high, and as soon as we take it out, I feel that it's definitely a buying opportunity. I mean, look at it right here on the intraday time frame. Just on Wednesday, the high was at 59.59. We gap up. You see the open here. They try to pull it back, but they couldn't pull it back here. That proved it was strong. And then we just gunned straight up from 59.96, and then we put a high in at 63.11. We come down, they gap it down a little bit, we consolidate under the open, and then once we get that move, we get a close all the way up to 61.73. So if you're watching this stock on Monday, then look for 61.73 to be held, and if we could hold over it, we're going to look to head back to 62.33. Now I'm looking at RRC, and if you guys have been following my videos, right here I was preaching this stock as a long right over this 37.38 level, and when we held above it, I know a few of my followers actually got long, and I hope you guys are still in it. I still think it's a hold. I still think that we could push higher, and the reasons for this, we are flirting with the 200-day moving average right here. That's this line right here. Sorry, I drew the arrow a little under it. So right now, I mean, if we could break and hold above the 200, I think this thing is definitely going to 45, and it's going to take out this previous high we put in about 2 weeks ago. So our initial target's probably going to be 50 on this, and Kramer just sponsored this back on Thursday. So RRC's looking good. On balance volume is ascending. Regular volume looks good. I think that you guys can make some coin off this. Looking at an intraday time frame, we got some massive buying coming through just yesterday, which was a light volume day in the markets. There wasn't much going on, and when you see something like this take place, this is like a basic formation that I look for. You sell off from the open, you hold support at yesterday's low, you don't get below it, and you snap it back up and you run it, you break it through the open, you break it through the pre-market high, and then from then on it was just 42.20, and we closed what, at 43.39, a $1.20 move with limited risk, no risk at all, actually 5 cents. We're going to keep watching this. RRC is on our long list. Next one I'm looking at is Schlumberger, and you see this white line that's dotted across. This was the April 29th high at $74 a share, and we're holding above that. Another bullish formation, and this one is actually a tight range breakout. These are the ones that we really look to endorse a lot of money in. It does seem like Schlumberger's headed to 80 from the chart perspective. We got a buy on the PPS right here, and I think that our alert's going to be set. I got to switch to an intraday time frame, but the on balance volume even looks good. If it could extend a little more and make another higher high, which it almost did on Friday, more money is going to be pushed in this up to this 80 level. Now let me switch to the intraday time frame, and another one we got massive volume on. Looking at the 5-minute chart here, actually I'm going to switch to a 1-hour time frame, and I'm going to give you guys some levels. Alright, so we need to put our alert, like I said, at the high of the day. And it just so happens we have a level at 76.56. So guys, set your alert for 76.56 on Schlumberger, and we want to, I'll show you what we want to see happen. We want to see Schlumberger break above today's high, which was 76.47, where we ended the day off at. We want to pull back, and then we buy right on the pullback. We buy it right around 76.60. We'll buy it right here, and our stop will be at 76.50. We're going to risk 10 cents on this trade, and it's a trade to hold. And if you guys want to take a little bit off after you make, maybe 10 cents at 76.70, just to get a break-even stop, do that. But I really think this one could run. Enjoy your weekend, guys. Tomorrow I'm going to try to put out another video with a few other stocks, but this video's time is cut short. I'll talk to you guys later. Bye.